To master trend trading successfully, one of the most challenging points is to find the right entry and exit. For that reason, I will show you in this video an indicator that will help you to make more precise entries and exits, the heart of your strategy. So this indicator will help you to identify the momentum loss in the market early, to find the possible points where the market may reverse. For that reason, I will show you exactly what the indicator is, what to look out for, and how to use it correctly, because many people use it wrong and therefore the results are not that way that they wish. So stay tuned, because in the end of the video you will know exactly how to boost your strategy. So let's start right away and dive into the chart. Alright, then let's apply the indicator to the chart. We look for the stochastic here and pick that one. I will make it a little bigger for our explanation. So what we see here is the stochastic indicator, a momentum indicator used to identify overbought and oversold prices. So let's see how to recognize that one. We see here we have the significant marks of 80 and 20. In between we have the light blue area, and above 80 and below 20. These are the situations that are significant for us. So over 80, above here we have an overbought situation, and below the 20 down here we have an oversold situation. So when the market spends time in these areas, we have a possible trend change coming. But to make the analysis more precise, we will also use the crossover method. For that, we have the blue line, which is called the percentage K. It is the fast indicator of those two. And we have the yellow or orange line here, which is the percentage D. It's the slower indicator and also a 3-period moving average of the K line of the blue one. And for those who are really eager to know, the blue line shows the current price as percentage between the highest and the lowest price of that period. If you want to adjust it, you can of course click into the settings, and here you see the average length usually used is 14 periods. So you're definitely going well with these pre-settings, a period of 14 and the faster percentage K moving average with period 1 and the D with the 3 period. Please don't get lost in over-optimizing these numbers. Concentrate on those factors that are really relevant for your strategy. And the important thing to focus on right now is how to use those two lines in order to tell where the possible trend change is occurring. So whenever we have the blue line above the orange one, we are in an uptrend. And when the blue line dives below the orange one, we see there's a mix diving above and below, but then the blue line dives below the orange one and stays there. And this is right the time where we have the momentum going down. So whenever we have the blue line below the orange line, we are in a downtrend. And when the blue line crosses the orange one again, then we have a momentum loss down here, a momentum loss from the sellers, which is indicating a possible trend change from short to long. And of course, the other way around, above here, we have a momentum loss of the buyers and a possible trend change from long to short. So let's check in the chart. So right here we have the crossing from the blue line above the orange one, and we wait until the lines leave the oversold area, and then this is a beautiful upwards movement until the market leaves above here the overbought situation right here and changes to a pullback. And please remember, it's not about taking every trade. We want to take the high potential trades. And of course, for that reason, we want to trade only into that direction of the ongoing trend. For that reason, we probably wouldn't have taken this trade, since you see we're coming here from an upwards movement, just changed into an upwards trend since we made a higher high. But yet, it's not really confirmed. the market has to make a new higher low first, which is it is doing here. So it is a possible entry here, of course, when the blue line dives above the orange one again and then leaves the oversold situation. It is a possible movement. Up to here, it works fine until the orange one hits that 80 line and then dives down again. But at this point, at the latest, guys, you see we have a sideways range building out here where the market is not leaving it yet. And it stretches out even further up to here until the market comes out of that range. And please, you know, I'm always honestly talking, so trading is more than an indicator. So please don't forget that this is just an indication. It's not a whole strategy, and it's also not 100% hit rate possibility. So please make sure that you use the indicator in addition with other prices. Scrolling out, we see we have this sideways range here, and we also have the support and resistance area here where the market has reacted to quite often yet. So here and here now it's the upper range of the sideways range, and here the market spends quite some time in that range again. So as soon as the market dives above, this is the situation where I would recommend to start looking for entries as soon as, of course, our stochastic oscillator confirms a possible trade. So let's look after this area. So here there is no possibility, but then down here we see the market comes into the oversold situation, and then the blue line crosses the yellow one, and this is a beautiful point where we could enter a trade. So a possible scenario could be you go on the daily time frame first to analyze the overall situation. Where are the support and resistance areas that are really relevant in this area? What is the underlying trend? Then you could go a little lower, like here. I picked the 1 hour chart, but 4 hour chart could be as well. And with the information of the daily time frame, here you could look with the stochastic indicator for good trade opportunities, which would be this situation, for example, and then you could jump on the time frame M15, for example, and look for a trade entry there. You know, I'm a fan of chart patterns and candlestick patterns for trade entry confirmation. We have done that in many videos before. If you want to know more in detail, jump back to those videos. Of course, here the other way around would work as well. Here we see that the blue line dives below the yellow one, and then we have this beautiful pullback here. And then here exit would be entry as well, since it's touching here the 20 line and then going long, and this would be a trade opportunity, of course, as well. Why not before? Because here both lines touched the 20 line but didn't cross below. So this is not a trade entry right in this section as well. Just here, it's the only point where it really touches the 20 line. Going on in the upwards trend until the overbought situation is ending right here. Also a possible entry for pullback traders. But as told before, we only look for the trending direction in this video. As you know, we only concentrate on the ones that are meeting our conditions, because we don't want to take every trade. We only want to trade the high potential trades. And of course, whenever you're analyzing the markets, you don't see how the market proceeds, like in our example here. So now let's see, we are getting in a really interesting situation. There's not really a signal coming soon. You see that here in this area, there's building a resistance level where the market seems to not go through. First touch here, and then a beautiful pullback, and then the market returns to this area but doesn't manage to break through. And here you also see a beautiful double top. If you follow my videos, this should be a well-known chart pattern for you. And you should also know that this is a bearish reversal pattern. So at this point, we will stop looking for trades into the trend direction long, because this is indicating that the reversal is going to take place. We also see here that the crossing is here, but we don't jump blindly into the market and go short now after the pattern. We wait for confirmation. And here we see the market is making new lower lows and lower highs, and this is confirming our downwards trend. So from here we look for trade opportunities now above the 80 line when the blue line dives below the orange line, but here we see no interactions above the 80 line. This is barely a signal. I think it's a little below, but here we see the crossing is slightly above the 80th, so this is a possible trade, and we see this one would have worked really well. But then we see the next opportunity coming here, and let me tell you why we don't take this trade. You see the market is coming really high here, even though we're in a downwards trend. So this is an indication that we are not continuing the downwards trend here. If you want to make it more clear, maybe it helps to use the Fibonacci retracement. And this one shows you that the pullbacks usually come into this area before they continue into the trending direction. And you see it's coming all the way up. So if it goes higher than this, it's a low chance that the market is continuing its trending direction. It's coming completely back to the level before, and then even breaking out here and making a new higher high. So this is a second indication that the market is turning. So that is the reason why we won't take the trade right here anymore, and why it is so important to use the indicator in addition with other price action. You see the stochastic indicator, or to be exact, the stochastic oscillator, is a really powerful indicator to help you identify where the volume is getting lost and where we have possible trend changes. So now try out yourself how to implement it into your trading to boost your trading strategy and of course your trading success. So that's it for today's video. I hope you enjoyed it, and if you did so, please don't forget to give it a thumb up, and I will see you next week with the next video. And if you don't want to wait until then you will find below this video the link directly to my website. I will see you there. Bye bye.